As you know, since the start of the year, we have seen unilateral actions by one of our most important members and an unprecedented rise in trade policy uncertainty. Despite the stiff headwinds, trade has shown resilience, thanks in no small part to the stability provided by the rules-based multilateral trading system and members' measured response to tariff changes. We now expect world merchandise trade volumes to expand by 2.4% this year. Now, what is driving this increase? First, importers front-loading orders to get ahead of future tariff hikes or retaliation. Second, soaring demand for heavily traded AI-related products like semiconductors, computers, servers, and manufacturing equipment to feed the ongoing boom in AI-related capital investment. In the first half of the year, 42% of global trade growth came from AI-related goods. Third, trade continued to grow among the rest of the world, particularly South-South trade, as members mostly continue to trade with each other normally. Supply chains are going where the demand is. With respect to services trade, which continues to outpace trade in goods, the new report projects 4.6% growth in 2025 in volume terms. Looking to 2026, the fact is there's so much uncertainty, it's hard to be conclusive. Upside risks come from strong AI-driven growth and trade, or policy changes like tariff reductions. Downside risks come from spreading trade policy uncertainty and trade barriers. For now, we expect merchandise trade to grow just 0.5% in 2026 in volume terms.
Forecasting trade has been especially challenging this year, given the unprecedented size and scope of policy shifts and policy uncertainty. The report finds that trade in AI-related goods was a key driver of the strong growth in the first half of 2025, with trade in these products rising 20% year-on-year in value terms, accounting for nearly half of year-on-year increase at the global level, despite representing less than 10% of total merchandise trade.
For the sake of growth, development, and employment prospects across the WTO membership, we must sustain what is working well, but we must also reform what is not working. And we must reposition our organization to better support members to take advantage of exciting new trade opportunities, not least in the digital economy. The outlook for next year is bleaker, yes, and how concerned I am, very. That's why we're insisting on the reforms, because we feel that the reforms will help to support and strengthen what is working in the system, which is obviously quite a great deal, according to the numbers, but also then help us buttress this resilience.